Hi, good morning, everyone. Very nice to be here. We are talking about blockchain adoption today and how to accelerate to mainstream adoption. My name is Nikita Sachdev. I'm the CEO and founder of Luna PR. We're a PR agency focused on Web3, been around the space since 2017. I actually started my crypto career here in Singapore with Huobi Exchange, now rebranded to HTX, and currently headquartered in Dubai with offices in London and New York. It's very nice to have all these fellow panelists here. Why don't we start off with some introductions?
Hi, I'm Wesley Crook. I'm CEO of FP Block, formerly FP Complete. I've been in the blockchain space since 2017. Our company is the original auditors of Cardano. We are the auditors for Swirls. Been building now for the better part of 8 years, about 110 projects under our belt.
Hi everyone, my name is Danosh. I'm the CEO of The Block in Dubai. We're a digital asset ecosystem for regulated companies, so we help them scale and grow out of the Middle East. We help them with everything from regulation to incubation, acceleration, PR, media, with the help of companies like Luna PR. And we also have a government advocacy arm within the business. So anyone looking to do anything in the Middle East, we want to try to act as the funnel for that.
Hi, my name is Farsh Fallah. I'm CEO of Serenity. We are a secured wallet, biometric, blockchain, and compliance company. And we're also based out of Dubai now.
Kyle Clemer, co-founder of Block Street. We're an incubator accelerator focused on driving USD1 adoption and then working with the different public companies helping bridge TradFi into decentralized finance.
So we have something in common today here with all the panelists, is that all of you guys have incredible PR. I'm joking. So another thing that we have in common is obviously we're all trying to strive for mainstream mass adoption. So it seems like in the last couple of months with regulatory clarity in the US that we are really moving forward. What do you think some of the barriers are that we're still facing today? And anyone can answer.
I think one of the biggest issues we have in the blockchain space is we got to get users into the space. We have all these ecosystems, all these chains, all these meme coins, and until we get clarity on a standard for infrastructure, we're not going to bring that mainstream in because the builders for applications aren't sure where to go when they come into this space to build, and then how do you, pick the right one. So until we can get clarity, infrastructure, standards, in the space, I don't think we're going to see mass adoption into the space.
You said you don't think we're going to see mass adoption?
Not anytime soon.
Not with the regulatory clarity that we have?
Not until we have a standardized infrastructure that people can build off of. Right now, you're having to pick between the various infrastructures, the EVMs, Solana, Near, Sway, Aptos, pick one. And as a builder, as a TradFi, as any kind of institutional coming in, they're going to want to make sure they're picking a right solution that they can put and eliminate the risk that they're dealing with from a compliance standpoint. So until they can see that clarity, they're not going to move into the space. That'll mean mass adoption from the user base will not come into the space or the money.
Okay, we'll circle back to that. I'd love to dive in deeper on how to solve that fragmentation.
Also, I think there's the other side of it. It's actually the user's point of view. I'm ex-Apple, ex-Samsung, and it's not easy to make a product where everybody uses. There's tens of thousands of hours, lots of money sunk into your phones, your apps, what they look like, how they work, just to make sure that everybody cross-cultural, wherever they are, can use it. Right now, blockchain is hefty. It's not easy to use. You have to set up wallets and seed phrases and this and that. Technically, mass adoption is when 30% of addressable market for anything uses it. We're far from that. Until we have that sort of Netscape moment, which is what happened to Web. Everybody knows Web 2. Nobody asked what Web 1 was. It actually existed. I was a little kid. It was called DARPANET. You would have to code a page in DOS just to go to a directory, which is today we call a website, but back then was a directory to see if there was anything even in it. Until several companies did some work, the infrastructure, NetApp, Oracle, Cisco, put the infrastructure in the back, and the front side of it, web protocols and Netscape. They came out with a browser where you could put www.something. That made it easy for everyone. If you can solve someone's problem, make it easy for them to go achieve it, now you can do everything on it. You can find your food on it. You can find your shopping. You can find a date on it. You can find a house on it. We haven't had that Netscape moment, I think, in blockchain yet.
And Farsh, maybe we can elaborate on that a little bit, because I know Serenity is doing an amazing job at making it simple for the user to get into crypto. So can you elaborate how you're simplifying the tech?
Yeah, sure. We're trying to do what Netscape did back then. All Netscape did, put all that DOS coding, everything else in the back so the user doesn't see it. We're doing the same thing with what we're doing with our wallets, with our biometrics, where you just set it up and we do everything in the background. Gas fees, go try to explain to a regular user what a gas fee is. Oh, this company takes BNB, that one takes that. We're automating all of that in the back side of it so they don't see it and they can actually just come on the blockchain without having to deal with all this or having this learning curve, which is difficult for regular users.
Yeah, I think it's a very common misconception, in my opinion, that people really need to understand how blockchain technology works in the back end. And I don't believe that that's so, because even today, we don't really, a lot of us may not know how NFC works, for example, when we Apple Pay from our phones. So.
Yeah, so I can just add to what these gentlemen said. When it comes to adoption, I think one of the key challenges is trust. Still, there's a lot of people that don't trust crypto, especially when, the president of one of the richest countries launches his own meme coin and a lot of people lose money on that. That doesn't really build trust and credibility for the space. That's just one example, and you have plenty of other examples of scams, and then you have the volatility, and you have a lot of people losing money on leverage trades. So, we still got some way to go to build that trust. And then, of course, just like Farsh was mentioning, the friction. He comes from an Apple background, building, products that doesn't need explanation. Today, the challenge is if I'm going to tell my mom how to use crypto, she would never be able to even grasp it. Like, what is a seed phrase? What's a passkey? What's a wallet? What's a gas fee? And we need to move away from that language. So I think the language that we use is a barrier to entry, and just make it like really dumb it down. Because by creating all these like cool words, we're also just creating our own little bubble that only we understand, right? So I think language, trust, friction, these things needs to be resolved.
And I think, honestly, where you're going to see a lot of that segue is with stablecoins. Stablecoins are things that are easily understood by retail. It's a digital dollar. And moreover, what you talked about with the retail adoption is that the large institutional companies are starting to do their own stablecoins. And there's already a level of trust with that, and it makes it easy for guys like you to implement this technology because you can reach out, say to the Apples of the world, and they start using wallet solutions with their own digital dollars. This is going to be what retail uses because they understand it. And then with stablecoins, you can incentivize users in ways that you can't do otherwise. And that's where you're going to see that iterative approach to reach that 30% addressable market like you were talking about.
So let's elaborate on stablecoins, because it's been such a big topic with Tether just announcing their USAT coin. So, I mean, there's a lot going on. Kyle, USD1. Stablecoins, I mean, I feel personally they're quite a big aspect of mass adoption. Users find it easier to use, easier to grasp. What breakthroughs do you think will actually help accelerate this adoption?
I think it is the large institutions doing it. I think you're going to see companies like Apple. You're already seeing, like you said, USAT. I think, that's just the beginning. You've got companies like Amazon that are exploring it. Walmart. I think you're going to see companies like Starbucks. And then there's going to be technology in the back end where it doesn't matter what stablecoin you use, $10 is $10. And, these are things that are easy for people to use. So it's that type of trust, companies that have trust and legacy trust getting into the industry that's going to really cause that.
I think that's a good starting point on it. The big companies have to get in it, but you still have to get the users in it. And that's where regulations come in. I mean, we got MiCA in Europe. There's other regulations coming out in the US and other territories. Even Singapore is now regulating. And as much as we like the way Web3 is, the anonymity, we have to give up something, and that's what goes away. You can't just be, like we literally have customers that order our product and won't give us their name and shipping. It's like, it's a physical product. I need your name and address to ship it to you. He's like, well, I've already paid. Like, that's not the point. How do you want me to go to DHL? Like, these are the bits that have to go away. But it's like anything else in life, there's a trade-off for everything. We trade a bit of anonymity, but gain that confidence that the government regulations give. People like our moms, our dads, and the majority of the market, they trust the government still. When the government says something is okay, then they'll probably trust it more and start maybe getting into it if we can make it easy enough for them to use it and get into it.
But so you talk about like the regulation coming in. Like I was just in Korea for Korea Blockchain Week, and Line has just integrated. Line is a super app there. They have just integrated stablecoins into their app. Here in Singapore, I think Coinbase announced that they're going to do the Singapore stablecoin. They're going to list it on their exchange. MAS approved. In the U.S., you have Tether and coming into the States, and the government there is working on some legislation around stablecoin policy. So it feels like we are really moving forward on the stablecoin front. In Europe, I think it was like nine banks in Europe came together to talk about how to integrate stablecoins within Europe. So it seems like we're really getting there with stablecoins, but Wesley, you were mentioning earlier that we're still miles away from mass adoption.
Yeah.
How far?
I think it's still it goes down to the infrastructure. You know, stablecoins are currency. People understand the U.S. dollar, the yen, the euro. They'll know the same thing about U.S. Tether and USDC and the other stablecoins. So I don't think that's the challenge. It's the trust down at the infrastructure level that they know that they can come in and those rails are there where they can move efficiently with security through the system and get their money off their phone to their bank accounts and what have you. And then also at the application level, we have to be able to build the applications that users want to use. In this space, so many applications are built from the ecosystem up, not from the user down. We have to flip that script. The stable coins are just a part of that puzzle, and I think that's the easier part of the puzzle solved because people are used to currency. People are used to trading currency, and that's what a stable coin is a digital currency. So for mass adoption, again, it really comes back to building out an infrastructure that people trust. People trust the Federal Reserve and the European Union rails. So when they know they do a wire transfer, that money is going to go through a system, it's going to be checked, and it's going to arrive where it's supposed to arrive. There's still some doubt in this space on if I send it from an L2 in Ethereum over to Solana, will it get there? And we have to get that infrastructure where it's a simple rail. Once it's there, mass adoption will come if we start building applications people want to use.
And do you feel that people trust more centralized systems today, that we're still in this Web 2.5 gray area?
I think people buy the hype of centralized systems. I don't think people fully understand decentralized systems. I think some of the things we're doing at our company at FP Block is we came out with a framework called Colmate. Our philosophy is the application is the blockchain, and then that blockchain can bridge to what other chains out there. So you as a application owner can build for a user. You control the security, you control the validators, you control the gas fees, all the things that are in blockchain under your control, and then when you go outside, you can bridge out. That's our philosophy. Going forward, we're seeing a lot of adoption to that from clients that have lived through the pain of starting building over here on Polygon, and now they have to move over to Solana because that ecosystem's not it anymore. Everybody's now talking about Sway and Aptos moving over there. From an application builder and a user perspective, we don't want to have to deal with that infrastructure. If you look at how our industry has progressed, I've been in this business 40 years. I started off DOS. If you look at where we are with this ecosystem, back in the 80s, before the PC computer, you were either an IBM guy, a digital guy, a Sun guy, Wang, Wise, whatever. Then the PC came, and it's like, oh, let's start tying this together. And as we progressed all the way up through the internet, Netscape had their moment, and then here we are. And we're going to have our moment here, but I still think it's about 5 years out before we really see it.
I think I agree with you on the 5 years. I mean, that was a little bit before my time. I wasn't around during the DOS times. I came when there was already Apple and PC. But I do remember that. And I think probably the 4 or 5 years is probably a good estimate when there's a unifying system. There doesn't have to be one. There could be 2 or 3, but at least something that unifies all the chains.
Exactly. Well, we have to start condensing down the enormity of the space. You know, we can live with 5 chains. We can live with 3 chains. We can maybe live with 10 chains. But we can't live with 100 chains or 1,000 chains where the builders have to figure out where to go. Because those ecosystems are very, dependent on that group of people.
You know, you touched base on users feeling comfortable. I think a lot of it also boils down to self-educating yourself as a user, really understanding what you're doing in this space. And I think that incubators, accelerators, they play an important role in kind of hand-holding the users through their Web3 journey. I know that you guys are doing quite a bit. Kyle, Danush, you're doing quite a bit as well. Maybe you can elaborate on why you feel users why accelerators and incubators play such an important role?
Well, I think they tell the story. I think that's the biggest thing is that, you mentioned at the application layer is that people don't know how to use this. The barrier to entry, the technical barrier to entry when it comes to blockchain technology is enormous. It might not be for us because we eat, sleep, and breathe this every single day. And it's our job to simplify the different pieces of technology that go there. And it's why we're strong proponents of stablecoins, because now there's the financial incentivization, especially with the regulatory clarity with the Genius Act, is that now there's more incentive than ever to build applications. And you're starting to see the foundations crumble in the fintech space with like the Rails, the Visas, the MasterCards. You can see them scrambling already. Like they're worried because their interchange fees are about to get gobbled up. And when companies are able to take that money back, now they have more incentive to build applications. And that's where the accelerators and the incubators come in, is because we're working with amazing companies like Luna to tell the story to retail, but at the same time, explaining that to the current ecosystem in crypto, which is highly skeptical of retail, which is strange because they want retail, but the incubators and the accelerators are the ones that tell that story and bridge that gap.
Yeah, so I think from an incubation acceleration point of view, they play multiple roles. One is, of course, to get these amazing startups out there in the world to enable these technologies that onboard the masses. But from another point of view, as you mentioned, everything is about education. And that is the biggest gap between bringing the masses into, into our religion. And why I like to call it a religion is, it is almost like, crypto is almost like a sect. People are very cultish about it. It's us and them. Mm-hmm. And what we have, luckily, in Dubai is we're opening up this big physical space. So maybe this is a wrong kind of comparison, but let's compare it to a church. A church is open to everyone. You can go in and you can pray and you can learn more about the religion. And for us, that's the role we want to play. We want to be open to everyone. We want to be accessible, and we want to bring a lot of education to our spaces, and we want to utilize those spaces to onboard more and more normies and everyday people. Yeah.
I think it's nice in such a digital era to have a physical space to actually walk into and have that connectivity. It's interesting because I've told this story several times before. I didn't come from a PR background. I don't know if you guys know this, but I studied chemistry, and I got into crypto because I went to a summit, heard about blockchain. At the time, I was frustrated because my dad, who was working here, couldn't get permanent residency because the hospital he was born in didn't exist, like they shut down. So he didn't have a birth certificate. And I was like, how can one not have an identity because a hospital doesn't exist? I was frustrated with the centralized system of it. And so when I started looking into it, I kind of put 2 and 2 together, and I was like, blockchain can really fix that. And when I started reading about blockchain, there was just such an association to crypto. Blockchain and crypto are not, crypto's a use case of blockchain, right? So there was such an association to blockchain and crypto, and all of it was put in a bubble of scams and hacks. And that's how the media was portraying it. So I wanted to come in and change the narrative in media and really highlight the use cases of blockchain, the power of blockchain. So that's how I got into this space. till today, though, it's an infrastructure problem, like Wes, you were saying. You know, there's the hospital, for example, they're still not putting your birth certificates on the blockchain because everyone is running on a centralized system. So it's interesting that you say that, yeah, we're 5 years down the line. What infrastructure is going to win? It seems like everybody is competing. Ethereum, Solana, which one are they going to choose?
Actually, we're working with one of the countries that we can't name in GCC, putting their healthcare using our biometric cards on the blockchain. They realize this problem exists. In fact, we tested our very first products quietly with a healthcare center in the US that had maybe 30 doctors and maybe several thousand patients. And it's really easy to use. Once they found out, the doctors, that we can put everything on blockchain and they can easily add and remove things. If you want a second opinion, you want to send it to another doctor, it's just literally a button. And he just goes and brings his card and then he can view it on the blockchain and send it back. These are great use cases. And with the infrastructure today, when we have actually a central place like that, it's easier to integrate. Now, when we're talking mass adoption, we're talking about everybody using it. That's a different story. But for these kind of things, the governments, the banks, where they want to have a central identity, actually, I think we have enough to get started now. Like I said, we're talking to one of the 9 banks in Europe ourselves. So I know which one you're talking about. And it's easy to go to one institution and give them 10,000 of these biometric cards and have all of their customers have it, and everything on blockchain.
But guys, doesn't it eat off the profitability that these corporations have, having everything centralized in their systems?
Well, I mean, obviously, you know, the IT world, if you look at a company, 98%, 95% of their operating budgets for IT is operations, not innovation. You know, so they don't have the budgets to spend. It's going to be the small guys like us that come out and make the innovations. You know, to answer your question, you're talking about who's going to win the battle. My prediction is 80 to 85% of the people we talk about today won't exist in 5 years. There'll be a lot of AOLs and Earthlinks out there, but there'll be a couple of chains that will have institutional backing or governmental backing that'll win this battle, and they'll bring the standards to it. And we'll start maturing this space, because one of the things, I was listening earlier, one of the ladies talking about testing. You know, in this space, we do not do professional software development. We do a lot of vaping, just hacking at it, throwing things out not tested, and we got to clean that up. We have to get to a very methodical way of building and delivering software in this space. You know, the blockchain technology is fabulous. You're right, the crypto level layering on top of it's caused a little, sliminess to it, but the blockchain technology is great. Everybody's looking at it. You know, we're talking with a company in the medical record space, can't name who they are, but they control most of the hospital record systems in the United States right now. They're looking at blockchain as a way to move forward. So, there's a lot of interest in this space. It's just nobody is clear on what the infrastructure is going to be. And once they know what that infrastructure is going to be, they're going to come in. People are doing R&D now, but they'll really come in when they understand that there's a common infrastructure with a common standard.
And then, to unify all of it, do you think it needs to come from a government level, that it cannot be like a decision of these multinational corporations?
It's going to be effectively entrepreneurship. Somebody like Steve Jobs, somebody like Bill Gates is going to walk in here and they're going to nail something and the world's going to go that way. And that's what's going to happen.
I think that's exactly true. Steve Jobs wasn't an engineer. He never wrote one line of code. But he understood what different cultures and different peoples, what he can design where everybody would just look at it and understand. That hasn't happened yet.
Yeah. That's what's going to make this thing go over the top.
That's a good way to put it. What about Kyle, Danush? Any comments?
No, I think the gentleman covered it quite well.
Okay, I think we have time for one last question. What do you hope to see in the next 5 years that will verify that, yes, we've hit mass adoption?
For us, it's really just having a set of standards and a common infrastructure, or a set of common infrastructures that everybody can build to and interoperate with.
I think what's important is that adoption, crypto becomes invisible. You shouldn't know that you're using a crypto rail to make your payments, or that your passport is an NFT, or X, Y, and Z. Everything should be just done invisibly in the background, and that's when you're going to reach adoption.
Maybe fiat becomes invisible too.
Exactly, hopefully.
I agree with that. What you talked about is people focus on the crypto and not the blockchain. And when we can just focus on the underlying infrastructure and the building of applications and not realizing that these things sit on rails, like that is going to be the we moment, like that we made it moment. Like right now, everyone's focused on DATs, like so for all the wrong reasons. You know, let's just get back to the technology. You know, when we didn't know there was a Web 2 or a Web 1.
I hope they just stop using the word crypto. I get upset when they call us a crypto company. We're a tech company that happens to have a crypto, not the other way around. We're a tech company. I have to remind people all the time, I wish that whole word would go away. No Hawk2 tokens, no, like, you know, like everything.
That's a good way to put it. I was actually on a DePIN panel earlier, and I asked what will define that we've really implemented DePIN, and they were like, when we don't have a panel on DePIN. So that's a good way to put it. Thank you so much, everyone. It was a pleasure speaking with you.
Thank you.
Thank you.
Thank you.
Thank you.